cryptocurrencies like Bitcoin and Ethereum and Solana, we talk about them as layer ones. They're like the cement parking lot that the mall's going to be built on.
Okay, so today I'm going to have Kristine Cranley with me, and she is super unique because, one, I think she's an educator first. So this is going to be a really great conversation where we talk about Bitcoin, cryptocurrencies, Bitcoin mining, off-grid mining, on-grid mining, and we're going to cover a really kind of unknown topic, a really new product that's really only been around for a few years. So Kristine is just a wealth of knowledge, and it's going to be a great conversation if you're looking for something that is truly alternative and you're looking at cryptocurrencies in general, but really Bitcoin and alternative investments around Bitcoin specifically. So let's jump into the conversation. All right, well, Kristine, thanks for joining us today. This is our first in-person interview, so thanks for poking me a few times to get this one scheduled. But thank you for being here. Why don't we start off by letting you introduce yourself, tell us kind of maybe a little bit about your background, and then how you got to what you're doing, and then we'll dive into maybe some of your real expertise and details in the convo.
Excellent. Well, Jared, it's always good to be with you. My name's Kristine Cranley, and I'm in a very niche industry of funding Bitcoin mining projects in off-grid sites. So using throwaway energy, gas that's often burned or just not used to mine Bitcoin with it. So, but it's kind of a very interesting journey how I got here. I started out my career, graduated from Texas A&M University with a psychology degree.
Oh, so did my brother.
Did he?
That's right. At A&M.
It's the degree you do when you don't really know what you want to do.
That is exactly true. That is exactly right. He had a couple of victory laps, but he did get his ring and he got his degree. Yes.
And the value of that ring's went up too because it's solid gold, right?
That's right.
So yeah, I had a great time at A&M. And then I spent a number of years doing nonprofit work in New York City. We helped pregnant women that were in a crisis pregnancy situation, looking for options. We'd have houses where they could live and just ways for them to choose life if that's what they wanted to do, and providing them with resources.
Okay, that's great.
So got a real insight at that time to the poor, just because so many of those women told us they wanted to choose life, but they felt like they were hemmed in because the father of the baby was threatening them and the parents were going to kick them out and the school was going to kick them out. And so anyway, just kind of started, just observed at that time how, especially in times of inflation, is the poor that suffer the most because they don't have the assets, right? They don't have the house value that's going up.
Yep.
So anyway, but that's just a bit of my background. And then I moved to Washington, D.C. I studied theology for a while, actually, but I was also temping so as not to have to go into debt and got into commercial property management. And decided, you know what, I don't really want to teach theology. And so got into the business world that way, and was managing a building in Washington, D.C. when COVID hit. And obviously everybody stopped going to the office. So ended up moving.
Don't need as many property managers if there's...
No, you sure don't. So the building went into foreclosure. I took the opportunity to come back to Texas where my whole family was. And right at that time, oh my gosh, it was like, this breath of fresh air when I got here. Because in the middle of the pandemic and I walk into Buc-ee's and people are unmasked and happy. And I'm like, oh my gosh, this is great. So anyway, but I took that opportunity. So I had started learning more about macroeconomics and sound money and what happens in times of inflation and monetary expansions. And I really went down the Bitcoin rabbit hole. And I started learning about Bitcoin and the opportunity it offers to have an asset where, because it's a fixed supply, you can store the value of your day's labor in something that can't be arbitrarily created more of the whims of the government or whatever.
Yeah.
So
can't turn the printer on.
Exactly. So I am one that I love to teach, and I can't not talk about what I'm excited about. So I created an LLC called Noah's Bitcoin. in order to teach people about Bitcoin. So like in honor of Noah's Ark, right?
Yep.
Escape the flood of inflation. If the price of everything's going up, you need to be on something that goes up with the price. Yeah. Obviously, none of this is financial advice. I'm not telling you. But
yeah.
But
I got that disclaimer in all the descriptions.
Okay, good.
I think if not, it's there. We're not financial advice.
Not financial advice. But I couldn't stop talking about it. So I was.
So now you're preaching the theology of Bitcoin.
Exactly. Sound money, right? And so I gave a talk. My dentist invited me to his country club around here, Ridgely.
Yep. Uh-huh.
And from that talk that I gave, they just wanted to know about what Bitcoin is, what other cryptocurrencies are. That was during the bull run of 2021.
And what was Bitcoin at when you started talking about it to them?
So when
you first started
looking into it, it was in the very first run up. So this was January, February of 2021, and it took me forever to do all we call it KYC, know your customers. And so I didn't get in till it was like about 40, and so it ran up during that bull run to 69, I think, and then crashed over the next 2 years
to sub 20, right?
Yeah
Because I remember knowing
yes.
I should be buying it.
And
guess what?
You never do. You only buy it. It's like people don't want it at that price. They want it over 100.
The last time it dropped to was it dropped to like 3 in the crash prior to that? Because it went up to like 20 and it dropped below 5. I think it almost dropped. I think it was dropped to like 31 or 32.
Wow. Yeah.
And I had a buddy who, Jason, and he had a lot of it, and he was telling me I should. And I was like, yeah, I know I should. If it goes below 3, I'll buy it.
Yeah.
And it went up to like 31, and I didn't buy it.
Oh my goodness.
And then it went up to 70, and then it came down to below 20, and I was like, I should probably be buying it, and I didn't. And now I'm currently telling myself when it drops below 100.
No, don't. My brother was so proud of himself because he bought Bitcoin at $100. No, $200 a Bitcoin, and he sold it at $400, and he doubled his money, and he was so proud of himself. And now he's sick to his stomach. And so I just tell everybody, you're not late. Just go in slowly.
Yep.
You cannot time this market because all the gains of Bitcoin are made on like 14 days of the year. And if you're not in, then you missed it. And then it chops sideways forever. And I mean, anyway, it goes up and it goes down. But so I started teaching about it, and I got a call from a CEO of a registered investment advisor firm here in Fort Worth, Phil Stanley.
Phil, yep.
And PM Squared Financial. He was one of only 5 investment advisors who was offering Bitcoin exposure to his clients. So he heard of the talk that I gave at Ridgely.
Interesting.
And he called me up and asked me if I wanted to get my financial license and join his firm. So I did. I sat for the Series 65 and joined him.
How long did that take you?
It took me 3 months.
Okay.
Yeah. I had time because, I just moved to Texas and still trying to figure out what my niche is, and still had a little severance pay and just couldn't stop talking about Bitcoin. So it came up at the right time. But since that time, Phil and I both let go of our financial licenses because, Phil sold his book of sales for the stocks and bonds part of his portfolio because all we wanted to do was talk about Bitcoin. And in particular, Phil had invested in Giga Energy, who was one of the first. They weren't the first, but there's some Texas boys, went to Texas A&M in their 20s, and they created a Bitcoin mining company that created the infrastructure for the off-grid Bitcoin mining.
Yep.
So Phil had invested.
Which we'll be talking about.
Yes.
It's
very fun. Very niche. Not anything like I started out, but So we were one of the first and largest investors in Giga.
Okay.
Did a pre-seed round with them, seed round with them, and then several projects with them, some of which mine Bitcoin and give the Bitcoin back to the client or the investors, some of which do hosting where you're basically building out the space and Bitcoin miners are coming and paying rent to you.
Yes.
So more stable, doesn't have as much of the upside. But also doesn't have it's much more stable.
Yep.
So did that for a number of years, and so since then Phil and I are focusing primarily on the Bitcoin mining. I still work with Phil. I also have some of my other projects that I've done. Some of my friends asked me to put together a mine. So yeah. So it's just kind of been a journey. I also do consulting for, now that the U.S. government is talking about Bitcoin and Bitcoin mining.
Bitcoin Reserve.
The Strategic Bitcoin Reserve. Donald Trump's sons created a Bitcoin mining company. They want American Bitcoin Corporation or company.
Okay.
They want a huge amount of the hash rate. That's the Bitcoin lingo for it.
And we'll get into some of that because really, and I know we've talked about it, but really the goal is to educate our listeners, right? So if you've listened so far and you don't know half of what we're talking about, we're going to get to the important stuff for the everyday investor to understand. So
excellent.
So you've got Donald Trump Jr.
Yes, so everybody's talking about Bitcoin, so I do some consulting because now people want to know how to get in it, and there's a lot of scammers in the space, and every time Bitcoin goes running up, all these people I've never heard of, and I've been networking in the space for 4 years. Suddenly they're all experts in this, and people can get really burned. So so been kind of pivoting to some of that, just kind of helping people get in and know who in the space you want to work with and who none of us have ever heard of, so maybe be cautious.
Okay. All right. So before we jump into maybe some of the alternative investments like that you have experience in, like the offsite mining, like the infrastructure for miners, like you mentioned, let's hit it from a larger perspective first. Of, okay, you've got someone who is in stocks and bonds. Maybe they've been in single family real estate. They finally are saying, okay, I do need some additional exposure. I've seen the gains that Bitcoin has had. I also, but maybe they're thinking, well, Bitcoin's the big one. There's more upside on another one.
My favorite question.
So what would you tell someone, what do they need to know about the larger ecosphere of cryptocurrencies?
So
that's a whole huge rabbit hole. But just generally, what do they need to be aware of when they're thinking about cryptocurrencies in general?
Yes. So I always emphasize that Bitcoin and the other cryptocurrencies are very different in my mind. So I completely just focus on Bitcoin because it's the gold standard. It is a fixed supply. Bitcoin is beautiful because it's decentralized. So there's not a central agency that controls it. I can send it directly to you. I don't need a bank. I don't need a credit card company. For that reason, the regulators speak of it more like a commodity because there's not one person that controls all the corn, right? All the lumber, right? So it's decentralized. It's not made or broken by a team. Now, the other cryptocurrencies, a lot of us kind of Bitcoin maximalists say they're invented to take your Bitcoin, but in a more sympathetic read, I think of them kind of like startup companies. So there's an underlying technology to Bitcoin, which is blockchain technology or decentralized ledger technology. There are some use cases for it. Perhaps. Like sometimes it's just too much. Like sometimes a centralized computer is a better place. There are some technologies like supply chain, right? So if you take a cup of coffee and you can scan a QR code and you can see where every single one of those ingredients came from, like, oh, this is from an organic farm in Colombia. But the problem is, so you put that onto the blockchain and so you can scan it and everybody's got a copy of that list. Great. But the problem is you still have to trust that the people that put it on the blockchain didn't lie. And so there is uses for it perhaps, but there are hundreds and thousands of tech companies, these blockchain crypto companies that are proposing things. And what I've found in my experience, I'm sure you've experienced this too. So Bitcoin tends to go in cycles because every 4 years the supply is cut in half. And so there's less and less of it.
The rate of the new supply is cut in half.
That's correct. Yeah. So we've already mined like 92% of it, maybe 94, I can't remember, but there's the last whatever percent, 6% is going to come over the next 100 years. But so because of that, it tends to go because of the supply shock that tends to hit after that supply cut. it goes in 4-year cycles. And so what people observe is these other coins, because you're farther out on the risk curve here.
Yep.
And so they go up faster when Bitcoin is going up, but then when Bitcoin's going down, they go to nothing.
Literally to nothing.
And then the next cycle, it's different coins that are doing the up and down.
So it's not even the same coin you're following. You're not just having to time a market. You're having to pick a horse and then time the market on that horse.
Exactly.
And it's a new horse every time.
Exactly. Okay. And so, again, the farther on the risk curve, the smaller the market cap, there's the potential for greater gains, but almost everyone will lose everything on those. Yep. And just today I saw, so Bitcoin is down today. I think it's...
Is it below 100 yet?
No, it dipped below 100, but it's back up to like 104, I think,
I missed my
now.
Opportunity, okay.
You got to put the buys in, because what they do is they like... I think there's some manipulation that goes on because of the leveraged longs, like people are betting against or betting for, and if the market moves a little bit, so you can be assured that it's going to wick down and liquidate all those leveraged people, especially when the ETFs, well, I don't know, I mean, need more coins. That's what I suspect. My tinfoil hat. But so the other coins, the reason they go up and down with Bitcoin in part is because they're being sold on these decentralized exchanges and they're priced in Bitcoin. So Bitcoin's going up, they're going up. But I say, have I thrown a couple $100 at some? Yes. But you really need to take your profits if it goes up and just cycle it into Bitcoin, or dollars if you want, but it's just not the same thing. And so there's this whole coin bias. This is where people kind of get into trouble. Well, one, they think, well, Bitcoin's already run up, and if I bought it, when it was a couple pennies a coin, I'd be so rich. But these other ones, well, they're only a fraction of a penny, and so I can put in $1 and I get a whole bunch of them. Well, one, you need to understand that Bitcoin can be chopped up into 100 million smaller units called Satoshis. So you still are so early. When it comes to Satoshis, you can get like for $1, you can get thousands of Satoshis. So you're not late there.
You can still buy incrementally. You're not having to buy a full coin at a time.
Exactly. Because people think, well, I can't get a whole Bitcoin, so I'm going to do this other thing. But it's you have to look at the market cap, right? So like XRP, a lot of people love XRP. I'll probably make some enemies by saying anything bad about it. But the thing is, like, first of all, it's not a fixed supply. And they keep dumping their coins on all the new buyers, but people are like, oh, it's going to go to $10,000 a coin. I hear people say that. But the problem is, like, the market cap, what it would have to be to go to that is just absurd, And so you have to look at those kind of things and be realistic. Just because it's a fraction of a penny doesn't... You have to factor in how many of those are out there.
Yes.
If you're going to be realistic.
The cost of what you're buying does not necessarily equate to the upside of the opportunity.
Exactly.
Yeah.
Exactly. And so just today I saw, Ethereum dip below 3,300 today or yesterday. That was the peak of the last bull cycle, right? Like, so the last cycle that peaked in November 2021, Bitcoin hit 69,000, I think. And I think Ethereum was 330, and today Bitcoin has crashed to 104,000, and Ethereum's still at 330. So, that's why I just warn people: just think of them differently. Bitcoin, think of it as digital gold. We could talk about the investment case of it, but the rest of it, I think of as like a tech startup company, and most of them are going to zero.
Yeah, I know the one area, and I think there's lots of other areas like this. To your point about like the blockchain technology being what's probably the larger use case for all the other stuff.
Yes,
because it's all built on that, right?
Right.
I'm a partial owner of a title company, and I think blockchain technology in the fairly near future will destroy the title company industry.
Yeah.
Because rather than paying what they call like a title plant to go and research the history of each individual property at every transaction.
Yes.
And this is a state mandated insurance premium. If you can put real estate title on the blockchain to where you're guaranteeing that an heir from 20 years ago isn't going to come out of the woodwork and claim the property.
Yeah, then you don't need all that title
because you have the decentralized ledger. essentially you can reduce the cost to a fraction of it.
Yeah.
You don't need the labor.
Yeah.
You don't need basically what the title industry does right now.
Which is exactly what BlackRock is talking about
Yeah.
with tokenizing. So this word tokenizing.
Real estate, yeah.
Right. And just for our viewers to take a step back, so the terminology there. So cryptocurrencies like Bitcoin and Ethereum and Solana, we talk about them as layer ones. They're like the cement parking lot that the mall's going to be built on. Anything that's built on a layer one is a token. And so there's a lot of cryptocurrencies that are tokens. And so that's what you're talking about is tokenizing the titles. Now it's going to mean every single recorder's office is going to have to update that technology. But once it's done, you're right. You're going to
adopted,
disintermediate all those things, which is what they're trying to do with the stock market too, right? Tokenize it so that I can sell my Apple stock. I can hold it on my phone. I can sell it at any time, 24 hours, kind of move past this system where, banks are closed on holidays and weekends because you don't need that. But something to remember is, one, it's not necessarily trustless. So Bitcoin, you have to trust. You don't have to trust anyone. It's a software program. If you change it, you don't have Bitcoin anymore. My computer can guarantee that you sent me the Bitcoin. Within 10 minutes, it's settled.
Yep.
A lot of people say, well, I like something, and I'm sympathetic to the whole idea of I can touch gold. I can touch gold. So
I want physical.
Right. So I am very interested. People tell me this a lot. I'm very interested in gold-backed cryptocurrencies because it's backed by something. Well, the thing is, you still have to trust that the people have the gold, right? That it's, so there's the trust factor to that. But it's also, it doesn't necessarily have to be decentralized. So digital ledgers, so Bitcoin is so beautiful because every single node in the system has the copy of it. You can't crush Bitcoin without crushing every copy. You can still have a distributed ledger that's centralized. So things to watch out. People like to grab onto some of the beauty of Bitcoin and pretend that they have that. I do think, so going back to what we said about the tokenization of titles. So, yes, I think we're going in that direction. We're going to disintermediate all those steps. You can easily scan it. It doesn't necessarily mean it's decentralized. It doesn't necessarily mean you can buy a cryptocurrency that'll make you rich when that happens, because large monopoly companies can be the one that win that contract to do that.
Yep. Okay. All right. So I want to officially switch from cryptocurrencies in general, and I want to move towards things that our listeners and passive investors may be looking at, right? So that is, and really your expertise is that Bitcoin mining in general, but also specifically that off-grid mining. And so you mentioned it a few minutes ago, was off-grid mining, and then off-grid mining hosting, maybe is the way I'm going to say it, but you might have a better way to say it.
Yeah.
So talk a little bit about what is actually happening.
Yeah.
When those things are being done. And then let's get into what the potential LP or passive investor needs to know about those types of investments.
Absolutely. So there's several questions in that. I want to start by saying, I tell this to everybody. Like, if you're like, should I invest in Bitcoin mining or should I just buy Bitcoin? And you don't have Bitcoin, buy Bitcoin.
Just buy Bitcoin, okay.
Buy Bitcoin because there's risks to all these projects, right? But there are also benefits. There's tax benefits. So I always want to be very honest when people ask me, should I invest in your project or should I just buy Bitcoin? I'm like, if you don't have any Bitcoin, just buy Bitcoin, dollar cost average. So I want that to be clear. I'm not trying to sell a certain thing, but let me tell you about what I do. So, with the Bitcoin mining, you can do it in two different ways. There's on-grid and off-grid. On-grid is much more reliable. Most of the Bitcoin done is on-grid. On-grid is actually good for the grid in Texas because Bitcoin miners can shut off in a moment. So if there's a power emergency, they come offline. They send back like millions of homes worth of power back to the grid. And that's why Texas's grid is much stronger than back when it went down in like 2020.
2020,
2021. That
Yep.
yes. Actually, I moved to Texas the week after that.
My middle son was like 6 weeks old, and we lost power. And when we woke up at like 6 a.m., it was like 50 degrees in our house. And so we're like, okay, we have a baby. We're not going to stay here. Yeah.
Yes.
We stayed with
Yes.
friends who did have power. But yeah, we had no power for 2.5 days.
Yes.
So
Yes, and that's so part of the problem with the grid is you need money to pay for it to be built up.
and they couldn't keep the power supply operating at full potential because full
Right.
potential is not needed most of the time.
That's right. And how do you incentivize grid infrastructure build out without an ROI on that investment? And
Yes.
so much of the solar and the wind that has been subsidized, and it's not what we call in the power supply space dispatchable. So dispatchable load means it's always there. So nuclear, faithful, like coal and natural gas.
Yep.
Texas survives on natural gas.
Yep.
It's dispatchable load. But anyway, so the problem with the grid is you need to pay for more infrastructure build out so that in those times of emergency, you have more.
Yep.
But what do you do with it when, as you said, most of the time you don't need it?
Yep.
So you need buyers of last resort. And so Bitcoin miners have up until now gotten some great prices. So they lock their power contract in 3-cent, 4-cent power.
Yep.
And then if there's a grid emergency, they can sell that power back to the grid. So you can make money that way. Or if they don't have a hedged price of power like that, it's just too expensive to mine during an emergency. Or the grid itself, ERCOT, has things called ancillary services where they basically pay you to do what you're told. And Bitcoin miners outbid everybody else, steel plants and stuff, because they don't harm their product by shutting off. So the point is, miners have been bringing the price of power down in Texas because helping build out new substations. And
because they're using as much excess power as there is.
Exactly.
So there's just extra money flowing in to help offset.
Exactly. It's profitable to build that substation out, and it helps Texans in an emergency because it's there and it wasn't there before. But AI data centers, they are very different than Bitcoin miners. So they can't go down in an emergency.
Right.
And I was talking to a broker, and he was saying, the AI broker, he's like, oh, we put in our contracts, we get the power before the hospital, right? Like they get the power first.
Yep.
So they are not your friend.
Zero downtime. I mean, I was doing that myself in my house and trying to figure out how to run these full time with no drops, right? And so it's very different power usage requirements than Bitcoin.
Exactly. And it's a lot more expensive to build out. So the bigger companies, can build theirs quickly, but there's a bigger ROI. So most of the Bitcoin mining community thinks that Bitcoin mining contracts for cheap power are going away soon.
For on-grid power.
On-grid.
Okay.
Everybody wants on-grid because you don't, it's so much more stable. And a lot of Bitcoin miners don't know how to operate oil field equipment.
Yes.
So you need to have the oil field people involved.
So you reduce a lot of variables by having on-grid mining because you're essentially just running on power that's being supplied by Encore or all that stuff. Okay.
Exactly. So if you can negotiate a super sweep contract for cheap power, then you eliminate some of the hassle, and so it's preferable to a lot of Bitcoin miners. So you have to be a big company to get that.
If the business model makes sense with the length of the agreed upon power price, you probably don't want to see a 5-year business model with a 2-year power price lock-in.
Yes. Oh, definitely. Okay. Right. Because you spend all the money to build out the infrastructure, and then your power prices change.
Okay. Yep.
So in Bitcoin mining, it is a small margin because there's so many people competing, and the system gets more difficult to mine a new Bitcoin block the more that are competing. So you need a low cost of power, and you need low OPEX in order to be the most profitable. So, but on grid, and so some of the projects that we've done because we've partnered with companies like Giga, and they got access to these great power prices and gave it to our investors. And so there's money to be made in building out the infrastructure and flipping it. So we've done some of that, or just building out the infrastructure. We've got a low price of power but maybe we're charging the people who were hosting their computers 7 cents, 8 cents. And so we make money on the spread.
Okay.
Right. So that's on grid. But harder and harder to get those contracts.
Yep. And as the AI boom, whether that ends up working long term is a separate conversation. But as the AI boom is happening, the ability to on-grid mine is going away.
I believe so.
From your perspective, and so you should be extra wary of on-grid mining opportunities right now.
Well, if you've got one, that's great.
Yes.
With a long, like on-grid, miners love on-grid.
Yes, absolutely.
It's easier.
But for our listeners who are looking for that in the next year or two, you should be extra cautious, do extra due diligence.
Yeah, about
on-grid.
the length of the power.
Yeah.
Now, if it's something that you can flip, like we've done that, we got like a 1.84 multiple on one that we built out, and it was like within a year and a half, it was sold. And so on a broader scale, the publicly traded Bitcoin mining companies, these venture capitalist people are coming in, buying out huge percentages of their stock, and then forcing them to pivot to AI half their power supply, because they've already got the energy infrastructure. They have to revamp it.
Infrastructure for the power, yeah.
So anyway, Bitcoin miners are going to find it harder and harder, I think. So that brings us to off-grid. So the beautiful thing about Bitcoin mining is it can go anywhere. All it needs is cell service. Starlink is just fine.
Super basic internet connection.
Yep.
A really slow one is fine.
Yes, that's right.
Well, slow compared to what we have.
That's right.
Yep.
So, you could go to a waterfall. You can as one of my friends likes to say, you could sell your power on the internet that has no other purchaser. Because I know I spend a lot of time in Canada, Alberta. They've got a lot of nat gas out there, and they're very interested in this off-grid mining stuff because they have so much more than they need, and they have problems. The pipeline are, controversy about that. They're like, fine, let's just sell it on the internet. So, off-grid mining, the kind that I specialize in or been working on is when you drill for oil, natural gas is a byproduct, and if you don't have a pipeline to sell it to, or it's just too expensive to put in the pipeline, or you've got too much pressure,
when the price of natural gas is so low that it costs more to transport it to sell it than it does to just burn it.
Yeah, because you got to push it into the pipeline, and that costs money, and it has sometimes there's too much pressure to go around, and it just so we call that economically stranded. So maybe you don't have a pipeline, you're never going to get one, or maybe you've got one, it's just not worth it to sell. People flare it, so that's why you see the candles in the desert.
They're literally just burning excess natural gas just to get rid of it.
Yes, because if you vent it, you just let it go into the air. That's not great for the environment. Flaring mitigates about 91% of the methane content, but it's still some. But you can take a generator out there to the wellhead and a little, like a shipping container, data box, rack space, and use that power, that wasted gas in order to mine Bitcoin. And maybe the price of, if you are grid connected or pipeline connected, maybe the price of gas will skyrocket. You can turn your Bitcoin miners off at that point and just sell into the pipeline if that's better for you. And I have a friend who bought a economically stranded well in New Mexico, and he does both. He doesn't want to ever sell his Bitcoin. So he sells the gas to pay the bills, and he mines Bitcoin with the rest. So so there's a strategy there. But again, you're getting a really cheap cost of gas, and if you can keep your operating expenses down, keep your generator online, then you're going to be doing a lot better than anyone that's just paying you to host. Like if you pay someone to host, you buy some computers and you pay someone to host, it's going to be 7 to 8 cents. The gas price, like if you pay $1 an MCF, it works out to about 1.5 cents a kilowatt hour. So, but that doesn't include all the OPEX expenses. So that's the key, is finding great partners, especially the people to operate the equipments and keep them going. And you have to think about scale too. So we had a problem with one of our sites. We built out a 1 megawatt site in the middle of nowhere,
off grid.
And but the problem was just economies of scale. So the team that was running it, they were more remote, and they were paying a lot of money to have it checked up on every week. And so now we've we've moved, put some of our computers on grid because we got a great price, but then also building out a site where the well owner himself has 80 wells in the area, and for this one site that we're building up, he's willing to like keep 10% working interest in order to keep everything on. He bids everything, and because he's close and he's got all the guys close, there you've got the economies of scale that he can keep it online for much less than if you're just servicing 1 megawatt in the middle of nowhere.
Okay. So we've got on grid. Concerns moving forward is going to be price of power.
Yes.
Off grid that's a lot less of a concern. Price of power.
Yeah,
it's a concern, but
it's not really, because especially if you own the well, then it's your gas.
Okay. So then, what are the variables on off grid that a passive investor should be on their radar to make sure that a GP or a syndicator is touching on?
Well, first of all, the team. You have to so vet that team that they know what they're doing. Because it's not so hard to mine Bitcoin. It's hard to keep oil field equipment on.
Yeah.
And so maybe you're buying the well, or maybe not. Maybe you just got a gas purchase agreement. So $1 an MCF, that's a good price. That's like $1, like I said, $1.50 kilowatt hour. But how long are you locked in? That kind of thing. A lot of the oil field people, like $1 an M, the gas is a drop in the bucket compared to the oil money they're making.
Yep.
So that's also part of the work that Bitcoin miners are trying to do right now, is help convince them that there is
help
value
get an oil
here.
and gas guy to agree to do anything with a cryptocurrency.
Right, because there are scammers in the space. I can attest to that, and so sometimes we've been given a bad name, or sometimes they just they can't touch it, But I will say I'm working with a well owner now. He's going to be our preferred guy, just fantastic. And he has... he's been talking to the well owners, because what he found is, so he owns these wells.
Okay.
They're pipeline connected, but there's too much gas. It's too much pressure. So he's been mining Bitcoin with half of it. So that makes the other gas flow easy. So he's making more money on the gas that he's selling. But the thing that he loves about the Bitcoin mining is he gets paid every single day. So he may be making, maybe it's a smaller, like he's only pulling 50 MCF off, but he's making maybe $600 a day. I can't remember the numbers that he's doing. It depends on the scale. But with the oil field, you're not going to get paid for 2 months. And you're only going to get paid what they say you're getting paid. Even if you're like, no, I think I put more in that pipeline, they're totally in control of that. And so he's been kind of making a case to the people around that, hey, you can get paid every day. And so the well owner that we're working with in East Texas, he's very interested in improving his site. So he got them for pennies on a dollar. And for people looking to buy the vertically integrated, buy the whole asset, they're going to look at how much it's producing a day. Yep. So some of the sites, what we're going to be doing is doing flips where we build it out and then we demonstrate for 3 months. This is how much you're making on the gas. This is how much you're making on the oil. And this is how much you're making on the Bitcoin. And now you have the numbers to improve that site and get a better price on it when you flip it.
Okay, so I'm trying to think of what a good comparison for that would be, because it's a little bit like an apartment development, but with an existing asset that was already there. I mean, it's almost like a conversion play. You take something and you're converting it, but you're still keeping the original asset.
Exactly.
The well's still there. The well still functions as a well.
Yep.
It's still producing oil and gas.
That's right.
And you're developing the Bitcoin mining infrastructure, adding that into the mix.
That's right.
And what you should be doing is you're still selling the oil.
Yep.
You have the ability to sell the gas.
That's right.
But you're also using the gas to create Bitcoin.
Correct.
And so if there's excess natural gas, you can do both at the same time. Or you could switch back and forth depending on the economy,
Exactly.
the economics that switch back and forth based on pricing.
Exactly.
Okay, so in that instance, what y'all do, or maybe say, well, what's the better option? Is the better option to go in and buy the well yourself, or is it to partner with well owners and like co-develop the deal? Like because I'm sure
either.
they're all different. So what are the pros and cons, and what are the concerns around doing it differently?
So the one of the other factors that the particular wells that we're working on right now are you can add benefit to benefit. So first, just starting level either way. So if you're going to just develop a site, all that stuff is 100% bonus depreciation now because of the big beautiful bill. So all the data center stuff. So you get 100% write off for your capital gains. So that's regardless. But the wells that we're developing are also in economic opportunity zones, qualified opportunity zones. So with an opportunity zone, if you buy something in the specified area, either you have to have original use, so it's never been depreciated before, it's never been, which is not going to be the case with the wells.
Because the wells would have been depreciated, yeah.
Right. But if you're going to spend the same amount of money or more, or if it's rural, I think in 2027, half, you only need 50%. But let's say you bought that well for $500,000, but you're going to be putting Bitcoin mining infrastructure out there, and the computers alone for a megawatt is going to be about $1 million.
Okay.
And then the rest of the infrastructure, you've already improved it. So then now you've got an economic opportunity zone. So that's kind of like a supersized Roth. Some people like that. You don't have to do it that way, but it just depends on what you can find, right? Like if you're just looking to dip your toe into Bitcoin mining, you're not necessarily going to want to buy a huge functioning oil well, that's going to cost you millions and millions of dollars. However, we've got access to some sites that it's just 80 MCF a day. So that's about 200. My 180 kilowatt generator runs on about 50 megawatts a day. So if you want to start something small, you could get that site for like 150,000. Own the whole asset. Now you own the gas, but it's also pipeline connected if you want to sell it there and build it out. So there's ways to do it small and scale. Again, the oil field people are the experts, and they're not wanting to really mess around with the Bitcoin mining stuff. So the hard part is finding those trusted preferred partners that know what they're doing. They're not scammers, or they're just not they're not incompetent, because sometimes they can talk a good game and they know their computers. High school education, you can be taught how to do the mining stuff. Now I work with partners who started the first Bitcoin mining repair company in the country 14 years ago. They used to work for Geek Squad. There's a lot of levels to keeping those computers singing. But the point I'm making here is that if you don't have the people that can keep that equipment on and the costs down, you're going to be wasting money, even though it looks great on paper because you have really cheap gas.
Okay, so how does an LP do their own due diligence before investing with somebody? What's your advice for that?
I would say, first of all, talk to oil field people.
Okay.
Because they're going to know this, find out, is the well depleting? Is the gas going to stay constant? So do all your due diligence on that side that, this Bitcoin mining sounds nice, but
will there be
really
the power to,
and then the generators aren't easy to find. Sometimes this is something they'll tell you, we'll have it to you in 3 months or whatever, but it's almost always like a 9-month, 1 year lead time to get those generators out there.
And these generators are not like little generators. These are like shipping container sized generators, right?
Yeah,
how big are they?
Depends on how big. So I've got a cat out there. I think total it was like 27,000 pounds. Like you got the big radiator, and that'll run about 800 kilowatts, or you can get a megawatt. But then if you're going to do huge, there's turbines, right? So obviously with the economies of scale, then you're going to get better prices. Mm-hmm. Now, the other thing that you have to factor in is, do you want to buy new generators? And new generators are expensive.
Yep.
So $1.6 million for the generator. So you're going to put a lot of capital cost in at the beginning. Or do you want a used generator? So we've tended to use rebuilt. So they were just rebuilt last year, but they're used. but it can be a mixed bag, and so checking on, the history of that generator and the lead time, because Bitcoin does tend to go in cycles, and a lot of money comes in when Bitcoin's high.
Yep.
But then if you have a year that it's going to take to
Order
build
it
out
when
that
it's high,
place,
and you get it back when it's low.
yes, you've lost a whole year of opportunity cost
Okay.
of mining. So lead time, team, all that kind of stuff.
Okay, so the LP can be asking about, okay, well, when exactly can you get this going? That's
Yes.
one.
Yes.
Whatever due diligence they can do regarding the actual production of the well to make sure that there's the power that is
Yep.
going to be needed.
Yeah.
What should they be doing when it comes to the team? Like, because you're right, you mentioned
they
it a couple
done
of
this
times.
before?
The amount of scammers is one.
Oh, yeah.
So, is that background checks? Is that
It
just
can be all of that.
Yep.
What have they done before?
Okay.
What have they built out? What
Proven
mistakes
track
have they
records.
made? If they tell you that they only want to communicate through Telegram, red flag, red flag, red flag. Because Telegram it's the app messaging
where everything deletes or something? Is that Telegram?
What you can, yes, you can, but also it's very difficult to subpoena because it's
got it.
like
Okay.
sourced in I can't remember where. Right.
Okay, so some jurisdiction they're not going to give anything.
Yeah,
over to
you're
anybody.
not going to get that.
Okay.
So if because I was talking to an oil field guy, he's like, yeah, these Bitcoin miners they want to do everything through Telegram.
Okay. Well, that's
away,
like in the
stay
real estate
away.
industry when you get inquiries telling you that they want to buy a $3 million home, please contact me via WhatsApp.
Yeah.
It's
yeah,
all
yeah, yeah,
it's all
exactly
overseas
that.
scammers. Yeah. Okay. All right. It's so Telegram in Bitcoin mining is the WhatsApp for real estate.
Yes.
All right.
And I don't, I'm not here to like tout my own services, but this is part of the reason I do the consulting is because I've been in the space for 4 years and we know each other,
Yeah,
and
and
I
so
can kind of
just
like
to
people
just to
can
point
help.
on that in Bitcoin, you say 4 years. So you hear 4 years like that's not very long.
That doesn't seem very
well
long.
because multifamily's been around for generations,
Yes.
right? And so someone's like,
Yes.
oh, I have 15 years experience in multifamily. So, okay, well, that's like the last time there was like a real crash. Currently, we're in a
Yes,
crash right now,
exactly.
right? But with Bitcoin and cryptocurrencies, like that's fairly early adoption as 4 years ago.
Yes, and to qualify too, like, I mean, I'm not an expert in Bitcoin investing. Like, people have been in it for much longer than me. But Bitcoin mining, so in the past, you could just do it on your computer. You could do it with a graphics GPU.
Yep.
Now, they have these very high-powered miners that are specifically dedicated. So
They're
it's
built
not
specifically to mine Bitcoin.
Yes.
And is it still ASICs? Is that
Yes,
still?
yes, yes.
Okay.
Yes.
They haven't moved beyond ASICs. They're just
Correct.
increasing the power of ASICs.
Exactly that.
Okay.
Yeah, and so Bitcoin mining is a little different. It's not as long of a field. Now, my partner that I work with, who created the first ASIC repair company in the country, he's actually been mining for 14 years.
Yeah. But
because
he was mining when it was like 10 cents.
when
or
it was on his
something.
computer, right?
Yeah.
So he was a manager at the Geek Squad,
Yeah.
and he actually took his whole team with him, who still work for him.
Oh, that's so
12
funny.
years
Yeah.
later. It's really cool. But so someone like that, yeah, he's been mining forever, but it's changed. Like, you didn't need an oil field generator to mine when he got into it.
You
So
can use
it is kind of
a standard laptop.
yeah.
Yeah. Okay. So scammers, one doing background checks.
Yeah.
What's their history?
Yeah.
Have they done any successful projects?
Yeah.
So some of the stuff that you would say for any type of alternative investment, just it's significantly more important because it's a lot harder to run a scam multifamily investment. I mean, you could, but it's fairly easy to check, okay, is there an actual asset there?
Yep.
You've got deeds, you've got titles, you've got, okay.
Yeah.
Okay, so we've got just straight up checking the individual for scammers or history.
Yeah.
What else are we looking
You
at?
can also think about, how do you want to do it? So I was showing a potential buyer the site that we're getting ready. And this guy has been in the oil field for years and years and years. So he's now a part of a mastermind with a group and made his money, right? Like, he's not looking to operate the wellhead, but he knows oil and gas. And he could hire the right people, or they could take the well owner and give him 10%. So you can structure the deal a different way. You may only need to pay for the the Bitcoin mining people to come in and build out the infrastructure for you, you may already have the people that can operate the generator. So you don't necessarily have to trust it all to one team, especially if you got people on your team that know, they're proven people. Like maybe cat generators, they know cat generators and they have a trusted provider. And so leverage the knowledge that you have and think about ways, maybe you don't know about building out the mining equipment, or maybe you want it turnkey and you want it hosted. So you could find the right mining team there, but maybe you've got the oil field piece already. So you don't have to entrust that part, if that makes sense.
Yeah. Okay. So what about the different, you mentioned this a little bit, the two different we'll say primary, it's probably not accurately primary, but the two different types of investments on these off-grid stuff.
Yes.
You can invest in the actual mining entity that's mining Bitcoin.
Right.
And maybe they own the whole infrastructure, but
right.
their primary is mining.
Right.
Or you mentioned, well, we're actually going to basically get an arbitrage off power. So we're going to have the infrastructure, and we're going to let someone else do the actual mining.
Yes.
So briefly cover like the pros and cons of the differences for the passive investor perspective.
Yes.
Which one do they want to invest in? Because and it could vary based on the investor.
Yes. So self-mining is kind of an acquired taste. My project is self-mining, and I kept my minimums very low, like 10,000. Look, you don't have to put a whole lot. Just taste
is
it.
In the mining.
The investment purchased the infrastructure equipment as well as the computers, and in return, they get Bitcoin.
So this is if someone wants to actually accumulate Bitcoin.
That's right.
And maybe they've already bought some themselves, but they're investing in an investment that will return them Bitcoin.
Right.
Okay.
And they just want to, test it out. And so there's that investment.
Okay.
There's the hosting stuff. It's important to remember that if you're on grid, you're going to get a better price when you're hosting people. But so being more remote, you're going to get a little bit lower price, but your cost of power is going to be lower as well. So it's still, you have to just look at the margins. But basically, you're purchasing the data box, if it's off grid, the generator, you're keeping that online for them. And then they're making the purchase of the computers, because the miners, they're the most expensive part of that purchase.
Okay.
And so like $1 million for a megawatt, that's about what I paid for my computers, my ASICs. And so you can only have to pay the $1 million for your computers for a megawatt and send it to someone like us. And we're going to keep it online for you. We're going to make sure we're going to give you a certain amount of uptime, maybe 95%, maybe 90%, but that's going to be in there. We'll give you this much. If it's less than that, we're not going to charge you. You're going to pay more because we're doing it turnkey for you. All you're doing is buying the equipment and we're keeping it online for you. So that if your investors are involved as LPs in buying that infrastructure equipment, then they're going to benefit from the cost, but they're still going to need the right mining team to make sure that those people that are renting the space from you are happy. And you're keeping it all online for
what's
them.
the difference in the style of the investment? Is one more of just a straight cash flow because you're providing you're hosting, so you're getting arbitrage off the power.
Yes.
And so it's just straight cash flow.
It is.
There's depreciable assets, so you get some depreciation.
Correct.
And then you get cash flow.
Yes. And a lot of those we've flipped, especially the on-grid stuff.
Okay.
So it could also be a quick flip.
Okay. Is that like a 1 to 2 year? You mentioned like 18 months.
Yeah, we did it really quickly because it was just such a valuable site.
So then that, you were selling it to somebody looking for the cash flow.
Yeah, well, that one particular I'm thinking of, we didn't actually make any cash flow because it flipped so quick that somebody wanted to buy it off our hands for 184% of what we put.
Well, sorry, that person is essentially buying cash flow from you. They're buying an asset that will produce cash flow for them.
Exactly.
Even though y'all hadn't produced cash flow because you were getting everything up and running.
Yes.
But obviously your investors received a return at the sale.
Exactly. And they're also there's a premium for time to connection, right? Especially in the Bitcoin space. You want to be mining immediately. So we spent a year building it out, and it was ready for them. And so now there's a premium on that because they're like,
Yes.
I want to start mining tomorrow.
Okay, because they can start tomorrow.
Yeah, because you get big corporations that are thinking, oh my gosh, we missed the boat. Nation states are talking about this. We want to be mining tomorrow.
They don't want a 12-month run, you know.
Exactly.
Okay.
Exactly.
All right. And so then in the first option where they're actually participating in the Bitcoin mining, as the LPs are, that's really not cash flow. It's not US
Correct.
dollar
It's
cash flow.
Bitcoin cash flow.
It's Bitcoin flow.
That's right.
And so let's say they were sensitive to their tax bill. They're actually earning something
Yes.
that they should be paying or being assessed a tax bill on at the end of the year.
Yeah, so we send back the K1s,
Yep.
and it's calculated by the cost basis from the day that it's mined.
The day that it's mined. Yep.
So we keep track of all that, and then we send them their K1s. So
Yep.
if they sell it, then whether it's short term or long term, it
Depends on how long they hold it. And
Exactly.
Talk to your tax professional, yada, yada, yada.
Yes.
But, okay, so they're receiving Bitcoin into their wallets.
Yes.
They get a K1 that says they earned $25,000.
Yes, although they probably get a K1 saying a loss because of all the depreciation.
Okay, cool. So they may not have a taxable, event for themselves in that year one.
Right.
If they continue to mine into year 2 or 3, maybe there will be.
Yeah.
And so they can either at that point sell some Bitcoin to pay the taxes,
That's
or
right.
ideally, what
That's
you
right.
would do is find some other way to pay the tax bill.
Yes,
because you're going to hold your Bitcoin.
Exactly, because there's more and more companies now that know this about Bitcoiners, that they feel like they own property on Manhattan Island. They're not going to sell. So more and more companies are making it available. You can take out a loan against that Bitcoin. Right now,
Yep.
you can get one for like 13, 12%, but they're competing with each other to bring it down. So, yes.
Okay, that all makes sense. So there's going to be some difference in risk between
Yes.
the different types of investments. There's going to be some difference in like the steadiness of the payout, essentially. Whether, because one, if you're providing the infrastructure, you should have a relatively steady income stream, right?
Yep.
But that's also going to be in US dollars typically.
That's right.
Or a fiat currency, whatever you want to call it.
Yep.
And if you are participating in the mining, your return is going to vary from a couple of factors. Your actual uptime,
Yes.
then the price of the Bitcoin when it's mined,
Yep.
and then the price of the Bitcoin when and if you ever sell it.
Yes. Yes.
So-
Oh, and can I go back to warning signs or things
Yes.
for LPs to look at? First of all, Bitcoin mining is because more and more computers are coming online. The returns are going to go down over time.
Yep.
You need someone that can admit that to you, right?
Okay.
And also not try to price the value of what you're going to get by assuming Bitcoin will go up. So when I do my pro formas for the Bitcoin mining returns, we focus on the cost basis of the Bitcoin. So it could go up, it could go down after you get it.
Yep.
I personally hold it because I expect it to keep going up over time.
Yep.
But you don't want, it's kind of like when someone says, well, you'll get a big tax write-off for the depreciation. Yeah, that's true. But if that's your whole case on what kind of money you're going to make.
Yeah. If your oil and gas deal,
Yes.
if all the returns are based around your tax benefit,
Yes.
that's not a great investment.
That's right.
Yeah. Okay.
That's right.
All right. Well, let me ask you this. We're going to kind of move towards the last question or two. But when it comes to a deal you're actually looking at, so we've talked about risk factors to look at when it comes to the operator, the investment, and all that. What are red flags that are going to show up in the paperwork? Is it fee structures?
Look at the fee structures.
Is it control? Is it?
I
what does that look like?
heard a horror story recently. Remember that with Bitcoin mining, the stuff you mine at the beginning is going to be the most profitable. Like that has the most opportunity to go up over time. More people come and compete. And so somebody was telling me about seemed pretty clear it was a scammer that said, okay, we're until 100% of the money's made, like we're getting the first of the Bitcoin, and then you'll get it after that. So it was like you can get in at this, whatever. Like it's kind of, I don't know.
So like the syndicator was taking the first
yes.
of the returns.
Yeah, like the first fruits, right?
First fruits, yep.
Yeah, you're like, okay, that's bad. I always admire waterfall structure because it's like, okay, you guys are going to get 100% of your money back before we're getting any
Promote or equity.
Yeah. So definitely look at the fee structure. Look at how hard. Something to really look at is the master service agreement with the operating team. If the people that are syndicating are not also operating it, this is one thing I learned. Now moving forward, I will always be on the operating team because we've worked with other teams that are operating it. Look closely at those documents. How easy it is if they're not fulfilling their part to
remove them.
Exactly. You have to look at all that and making sure you can just part easily, without them making a claim on your generators or anything like that. So look at all those documents, and also the syndicator, right? One of the things that we put in ours, the ones that I put together, was if they don't like the job that I'm doing, they can vote me out.
Yep.
Right. So just having those protections and those freedoms just to kind of align incentives.
Okay. So what would be, and you don't have to give your exact fee structure that you use, but what would be a range of fee structures or waterfall that should be expected in your space? Like, is this similar to other syndications, other funds? Like,
our
it's going to vary wildly.
Our space is a little bit the Wild West.
So I was thinking that earlier. So
from private equity, right?
Yes.
So what Phil and I were doing. So we do like more of a typical. So 2% on the money raised, and that's what I would make for getting all the K1s done and all that
fee
stuff.
To
Management
operate.
fee.
Yes.
But then I like to do it a waterfall and invest myself. I mean, that's something every LP, like, are you investing yourself? So I put a lot of money into my own deals because it tells you that, I'm very incentivized to make it go well. But there's a lot of different ways. If you're the Bitcoin miner, if you're actually the mining team that's looking for money, I tell those people, you don't want investor money. Like, just if you can get a loan, get a loan, right? And I think that's true for everyone, because our investors are going to want to see a nice return, which means that you're giving away a lot. And so this is kind of the hard thing. Like, the companies that do really well and have made it, they don't need investor money. And so, but the ones that are brand new, they need investor money, but they haven't proven what they can do. And so there's so many different ways to structure it. And again, that's kind of why I move more toward the consulting as much as I can, because it's like, this is what I've learned. And if you're on the Bitcoin mining side, if you take investor money, your obligation, you're fiduciary to them, and you want them to have a really good deal so that you can do more deals with them. That's a different thing than, okay, I just have to pay back, even if it's a 15% Bitcoin backed loan. You pay it, but if Bitcoin's going up over time, and some of those Bitcoin-backed loans, there's even like you pay when you pay it back is when you pay the interest, so you can hold it forever. And maybe if Bitcoin, you're holding it for 5 years and Bitcoin goes up exponentially, just give them a little bit of the Bitcoin and take back most of it.
Okay.
So anyway, that's not what the LP investors, you want a good return, right?
Okay.
Because it's a risk. And so you want a good reward on locking up your money.
Yes. Okay. Well, Kristine, let's move to let you, do you have an opportunity that you're working with right now? And if not, I know that you might in the future. So how would they get a hold of you? So what's going on in your world?
So LinkedIn is probably a great way to get a hold of me. I'm very excited about some of the partnerships I'm working on right now. So I have a well owner that has 80 wells, 13 in opportunity zones. He got them at a great price. He's looking to flip a lot of them.
Okay.
So people that want to actually buy the whole well, there's that opportunity. And I'm also working with my friend who started the ASIC repair company, to operate. So we're going to be doing a lot of different things. We're going to be hosting, and he's hosted publicly traded companies before. So his company knows how to host. So if you're looking to send your computer somewhere, we can help you with that. If you're looking to help build out a site, like maybe you own the site, but you need the right team to help build it for you, that's what we're doing with this well operator. I even have opportunities of quick flip because my partner on the mining infrastructure side, he's got amazing deals just because he's been in the space so long. So we can get a generator or equipment at way below what anyone can get it, build out the site, flip it, the well owner makes money, and then the investors that put that money in to flip it quickly, they make a good return in a short amount of time. So, and then even just if you want to talk about, hey, I'm trying to structure this, I need to break into the space, I need to hear what you have to say about these people I'm thinking of working with. I kind of shine there because I do know so many people in the space and paid the price of tuition, made my mistakes, and
Okay, well, we'll make sure that is in the description. But that's Kristine Cranley. For anyone who's looking it up, it'll all be available to find.
Excellent.
I'm sure we'll throw an email address or something there for you as well.
Yes.
So, Kristine, thank you so much for being here.
Thank you, Jared. Always a pleasure.
All right. Now, if you're anything like I was 3 or 4 years ago, a lot of this information was new, and we probably threw out a lot of words you're not super familiar with if you're not familiar with the crypto space. So if this is something that you're interested in learning more about, reach out to Kristine. She is great. And if you are looking for help doing due diligence on PPMs or offering memorandums, private placement memorandums, go to the description. Get my guide on how to use ChatGPT for due diligence. That's going to be a pretty universal for any type of alternative investment that's going to have a PPM or large legal documents attached to it. This will help you go through 100, 200 pages in literally minutes if you need help going through some of the documentation to look for red flags, fee structures that are odd, or anything like that. So thanks for being here, and come back next time.